Welcome, everyone. I'm Angelo Robles to the Angelo Robles Podcast. I'm also the founder and CEO at Family Office Association. I look to distill best practices and best ideas of among the world's most successful investors, families, and their family offices. I hope to provide thought-provoking opinions and feature amazing thought leaders to our listeners of the podcast with an eye towards the future of investing, significant families, and their family offices. Today's title is 12 Investment Themes for the Next Decade. And as usual, we're going to cover a lot more than that. So it's going to be a lot of fun. It features someone that I'm relatively newer to getting to know. And in my years of doing this and knowing so many different amazing people and investors, just like, wow, he's pretty special. So he's James, JJ Sowers. I usually call him James, but I may break out the JJ every now and then. So it's really a pleasure. There's a couple of announcements I would like to make. I'll keep them quick. And yes, we're already getting chat features. You know, Angelo, you're going very lavender today. I do like lavender. I don't know if it's going to show well up on camera, but I'm looking down on it. Trust me, it's very lavender. So it's now you all know kind of my fave color, by the way. So let me give you a little context about James. And he's going to tell his story, which is an amazing story from where he came, which was from nothing to his accomplishments and his acumen as an investor. But I do want to note, and this is a little different, and he's okay with me mentioning this, James is a member of the Family Office Association. And it's a pleasure to have him as a member, such a esteemed investor and just all the work that he's doing. He is very guarded with his time. And if there's any interest in really learning how to connect with James, I mean, honestly, that's like the main value of being a member inside the Family Office Association. So if you like what he has to say and want to connect with a fellow investing peer, send something through me. And we're going to do a better and better job of connecting our members to fellow members to provide them real, quote unquote, peer-to-peer, especially during COVID. The other note that I'll keep very brief is we're going to go pretty hardcore for a long time here. This will be a long form interview on investing. We're doing it mid-December of 2020. You may hear it a week later and everything changed. Certainly months or years later. So understand it during the context of the time we're talking about it, mid-December of 2020, and the fact that it is strictly for education and entertainment purposes. You need to do your own diligence. We're going to talk about things that could be very asymmetric and have tremendous risk. Tremendous. It may not be for the majority of you, but hopefully you'll learn about the thinking process and the thesis behind it, which may be wrong. Again, make your own decisions, do your own diligence. This podcast video is really focused on single family office level investors, minimum qualified purchaser and above. Wow, that was a lot. James JJ Sowers, welcome to the show.
Thanks for having me. Such an honor to be on your podcast.
Oh, well, boy, I'm going to sit up a little straighter now. You are following in some big names, but you're going to do every bit and hold up to them. Tell us a little bit. You have such an amazing story. Tell us a little bit of where you grew up, and then maybe segue what led you at an early age to fall in love with investing.
Yeah, so I'm actually adopted. I mean, people can probably tell because I don't have an accent. I'm adopted from South Korea. And back then in the 70s, there was this group called Catholic Charities that brought children over. I was in an orphanage. It's unknown how I got there. Some say, you know, somebody rung a doorbell at the police station or rung a doorbell at the orphanage. I imagine I was probably found somewhere and they just tell each kid that to make them happy. And then I was flown over here to New York City, and my parents are from Baltimore, Maryland, where I grew up. They came and got me, and I was told it was about $300. I'm not sure if they had to pay that or if it was donated because it was Catholic Charities. And the $300 was for the flight from South Korea to New York, and my parents from Baltimore to New York, and us back. And I think I had to get some kind of vaccinations or something like that. So as a child, I grew up in Baltimore, Maryland, and we didn't really have a lot of money or anything, but we had a great family, a loving family. And I used to actually find pennies on the ground, literally on the ground, and pick them up. To this day, because I believe in habits, I would find the pennies and then keep them until I got 25 cents. And then I would buy these swimsuit card packs. And then what I would do is it was 12 cards in a pack. I would break up the packs and sell them for whatever I could get. So one might be for $1 for a card. One might be for 25 cents. And I would just keep reinvesting the profits. And I didn't even know they were profits, or that was kind of like running a business. So that's kind of how I got started. And I always say that's my start in investing. And as a child, I used to love baseball. I had heroes like Jackie Robinson, Babe Ruth, Ted Williams, and I used to literally walk to the library through this thing called the Gully and read books about them. And then I discovered books about investors and books about people like Rockefeller, Carnegie, things like that. And I would just keep reading and learning. And I found periodicals, and I just kept learning and getting my way of thinking. I learned critical thinking skills, that money's supposed to work for you. You're not supposed to work for money, things like that, things that my parents weren't experienced in. I actually got an education from the library. And it's pretty interesting too, because you could read inner reports on these little old microfilm things and get a free education that most people probably paid hundreds of thousands even back then to get. And I was like, this is incredible. And I used to learn, it's just a million little things that you do right that lead you to have the good luck for the one right thing to make your life better. And I always thought, I can't build the railroad industry, the oil industry, the banking industry, but I can learn these people's way of thinking. I can learn their habits. And basically I was like, wow, this is how I'm going to have a better life and do something in the world.
That's amazing. And what I take from that is no excuses. Come from a humble background and take responsibility yourself to be educated to, and we'll get to this in terms of how you make decisions to form a thesis. And really, it made me think of a couple of different things. One, highly recommended to everyone, Think and Grow Rich. What a great book. I mean, that really, it's an iconic book. So like everyone knows it, reread it. If you haven't heard about it, read it. But I think there's an important message in what James said right there from a variety of different perspectives. So it's important to solve problems, to be a critical thinker, to put aside any biases that you have and we all have relative to how you form a thesis and make a decision. Tell us about the process that you go through when you're looking at various asset classes, unique investments, asymmetrical bets, to how you reach a conclusion and a thesis.
Yeah, so just real quick on Think and Grow Rich, that was one of the books I read. And what I learned from that is you become what you think about the majority of the time. So I kind of learned, if you focus on something, it gets in your subconscious mind and it comes to fruition. Maybe not 100% in the way you thought, but things just keep happening to lead you down that path. So I learned too from reading books very young, like Peter Lynch and stuff, that you have to have a thesis. Like his thesis, I think he had a book called One Up on Wall Street. And what I took from that was basically that people who aren't on Wall Street are not necessarily like institutional players can actually get a better return if they form their own thought, thinking, and thesis by saying, hey, I like to shop at this store back then. I'm going to buy that stock because I love that product. I know that product. And in today's world, a lot of people did well on Tesla because they knew the analysts didn't know what they were talking about. They loved the Tesla. While everybody else in the institutions were shorting it and saying the valuation didn't make sense, the people who used Teslas were like, no, I love Tesla. It's a cult brand. It's a cult following. So you really got to say, hey, what's my view on the world? Where do I think the world's going? Non-consensus and right. Because if you believe what everyone else believes, you're going to basically get what everyone else gets. Like, so you could buy an index fund and get what the market gets. But if you really want to get asymmetric returns, you have to have your own thesis of the world different than everyone else. And then when the world comes around to your view, then that's where the big returns are.
Absolutely. And by the way, everyone, like I said, this will be a longer form interview. James is James. He's a mile a minute. He talks fast. He's dynamic. And I'm not going to constrain him or say to slow down. The opportunity is you're getting his full blunt, and then hopefully I'll be able to corral him a little bit and dig a little deeper into many things. So you're an acclaimed angel investor. You were noted as such by Forbes a couple of years ago. What have you learned really since then in the last 4 years about being a prolific earlier stage angel investor?
Yeah, so I learned an awful lot. So first thing, there's a big difference between just investing in the startups and the business of investing. So what I mean by that too is, like, for instance, you could be one of the first checks in, but then in later rounds, somebody comes in and gets, like a 3x liquidation preference, and say if they put in 100 million and the company sold for 300 million, you would actually get zero return because they get all their money back before anyone else. I've also learned too that all acquisitions that you hear about in the media aren't necessarily good acquisitions relative to your expectation. So you might just get your money back. You could get 3x. You might get stock in a company you never heard of, or you might get something where it's kind of like a rev share in the future. The company's acquired, you don't get anything right now. And if they hit certain milestones, then you get your money back or some multiplier. And that actually happened with a company where they were doing pretty good. They got acquired, but it was on a rev share thing. And then COVID hit. So now the parent company hasn't sent us any of the money yet. So, I mean, things like that. And then there's things too, where I've noticed too, that things like information rights and stuff, even though you may says you have them, what happens is around Series B or something, some big VC may come in and take away some of your information rights. You may even hear about the acquisition, getting a strange letter in the mail from some attorney. Who is this? Oh yeah, by the way, we were acquired, blah, blah, blah. Maybe it gets announced, maybe it doesn't. Or sometimes you find out about it in the media. So, I mean, it's just a bunch of crazy things. And another thing I learned too, because I'm a big believer in supporting minorities and female founders and things like that, because I believe people who are underestimated have a chip on their shoulder. So they're going to fight even harder. And it's turned out during the COVID, that really is what happened. A lot of those founders are actually rising to the occasion, because I always say it's relative to what everyone else is doing. So when everyone else is falling down, even if you're just keeping level or moving a little bit, you're actually rising. So that's one of my theses. But one thing I've learned about that too is it takes a lot of capital for innovation, a lot. And historically, the minorities haven't raised as much money, but I really think that's changing. And what the great thing is, a lot of them are going to survive long enough where we hit that inflection point where everyone realizes, hey, these minorities, these females, they're way better than these other people. And they're going to start getting the capital to build the next Facebooks, the next Amazons, the next Googles. I mean, things that just change the world. And it'll be in things like climate change, biotech. I mean, all kinds of incredible things.
And by the way, audience, stay patient. Those are all direct theses and opportunities that we're going to get to. And he's incredibly well versed in those subjects and will be very dynamic in terms of some opportunities. But as usual, I do like to set the stage a little bit. So tell us a little bit, staying on that theme as an angel investor. I mean, it's a very difficult industry. The best of the best will fail way more than half the time on the entrepreneurs they're investing in and who they're backing. If you don't mind, could you name a company or talk about a founder of one that really, you saw something maybe others didn't, and you've been proven right so far?
Yeah, so far, especially talking about the female founders, I mean, there's a company called Markable, which does AI. They're doing really well. A company called Bloom, which a lot of people, they changed their name. It used to be L-Box, and people thought that was strange, like a direct-to-consumer for organic tampons. But of course, they have this box now that has other things too. So it's basically wellness for teenage women. And then Blaine Financial, which used to be actually called SageWise, and they used to do smart contract resolution. But as it happened in the blockchain world, everyone's problem is no one's problem. So everyone needed smart contract resolution, but nobody wanted to pay for it or really cared because it was everyone's problem. So they pivoted into games. So it's basically a game you can download on your phone. They have 2 or 3 games now, and they're actually doing really, really well. A lot of users, and it's all happened in the last year. And you can actually win free Bitcoin. So actually, if anybody has children, they can look up Bling Financial and download the game. It's mostly on the Android phone, and they're getting ready to put it on the iPhone, but it's pretty cool. And I invested in a couple too, a married couple called ShearShares, the company. And a lot of people say, they used to say, oh, don't invest in married couples, this, that, and the other for all whatever reasons they have. But I always thought, Cisco, weren't they a married couple? And didn't they create the most millionaires back in the day when actually $1 million was something?
Absolutely.
As far as employees,
yep. Back in the
investors.
early mid-'80s.
Right. So I was like, that's not necessarily right. So I try to use my own critical thinking. I was like, oh, these people are really determined. They have a domain expertise. So I kind of look at things like that. Is this person dedicated to this cause? Because you're betting on people first. And obviously the number one reason anyone's going to fail or succeed is the timing. If the timing isn't there, it doesn't matter. It can be the greatest team, the greatest technology. It just isn't the time. And then maybe a decade later it happens and becomes the next Facebook. But it's always the people first in building relationships.
And, going back a little bit to what I said earlier, how do you avoid, as you have successes, you develop perhaps confidence, some would call it an ego, and you develop biases. We all do. And as we get older, sometimes, especially if we've had success, we fall a little bit linear in terms of our line of thought. So how do you kind of solve problems, still think critically? And how do you remain open when you look at a investment broadly, then look as an asset class, then look to narrow down? You are going to be wrong. You're not perfect. What's your process that leads to forming that thesis?
Right. So I actually think that in startups, you're probably going to be wrong 90% of the time. And because of the power law, you're just looking for that one to be the next Facebook, and it's going to out-return everything. But I actually believe even in the public markets, the same things can happen. So I remember reading about this too, growth mindset versus fixed mindset. So I try to keep a growth mindset, and I've actually come to find that in life, you can have a growth mindset in one aspect of your life, but a fixed in another. So I try to catch myself sometimes, if I have a fixed mindset in one part of my life, it doesn't have to be investing, and always keep a growth mindset. And one example would be nowadays, there are people in climate change and space rockets, and they give these crazy projections, and you have to think, okay, what's the quality of the entrepreneur's thinking? How did they come up with those numbers? And don't just dismiss it because it seems to you like it's crazy. Because I really believe we're hitting a technology inflection, and it's going to be the intersection of humans and technology and biotechnology and all these things. And we're going to have returns, trillion-dollar companies, not just the ones we know of now, the 4 or 5, but hundreds of trillion-dollar companies, which will lead to $10 trillion companies, to $100 trillion companies. I think we're entering the greatest bull market of our lifetime, because this is a new revolution, the new railroads.
Yeah, I mean, we're going to get to some of that. So that's a great hook for everyone, by the way. And yeah, I mean, your work and your thesis on that is among the best that I've ever seen. So another hook to hold people in. We are getting a question. JJ, what do you think in addition to dedication from an entrepreneur, and this from Chris Ray, what else do you look for in the person you're investing in?
Right. So not only dedication, because obviously you're right, because you could be dedicated, but you can't execute. So that's kind of like delusional. So the ability to execute. And it's really hard to know how someone's going to execute. So you're making your best guess, but like I'm trying to look for things they've done in their past. And it doesn't necessarily have to be a successful company or like someone getting A's in school, so to speak, on all their tests. So I'm looking for how people bounce back from adversity, because you're going to, especially in startups, you're going to get punched in the face, knocked down hundreds of times. So it's the ability to adapt, to learn, and execute fast in previous life experiences that may have nothing to do with startups or business. But it shows somebody's way of thinking and how they react. Because I really believe it's not the strongest that win. I think it was Darwin or someone who said this. It's the ones who adapt and learn the quickest. And one thing I try to do is I call it, return on learning. How quickly can I learn something and then adapt and adjust my thesis? So there may be people I'm talking to, and I might ask them a question like, oh, that's impossible. That's the stupidest thing I've ever heard. And I'm not insulted. Why am I an idiot? Why is that the stupidest thing you've ever heard? And then they'll say why, and I'll kind of probe them a little bit. Okay, well, theoretically, if this one thing were to happen, is that even possible? And they said, well, yeah, 99.999%, it could never happen. But if that happened, yeah, it would, I guess, theoretically be possible. So I kind of put that in the back of my mind, kind of like Steve Jobs connecting the dots, something from Stanford speech. And then when I'm talking to a founder or somebody, and there's that one thing they say, I'll ask them a question, what's the one yes if that would make this a decacorn or $100 billion company, regardless of everything that goes wrong? And if I hear, and then might connect in my mind, wow, that's something some scientist or some expert told me that one yes it was possible, and this person's thinking about it. And then I might ask them a question like, okay, what are the 3 biggest risks and the probability of these happening? And then I'll instantly just talk to them a little, and I'll say, okay, so walk me through your day. What do you do? How do you focus on the business? And if it doesn't go back to their yes if, that tells me they're not focusing on the right thing, because they just told me what the yes is for the big outcome.
Yeah, wow, that's actually really good insight in questions that you ask. Do you think the rise of so many startups will lower aggregate returns, and why?
So I think it's great that there's so many startups because there's so many experiments. But now with 0% interest rates, there's so much money in the system. I mean, VCs have literally raised billion-dollar funds. There's funds popping up everywhere. You have corporates investing, sovereign wealth funds, pensions directly, family offices, probably people I'm not even thinking of. So I think in aggregate, it is going to get harder and harder to have the big wins, because it's cheaper than ever to start a startup, almost for nothing because of the infrastructure, but it's more expensive than ever to scale. And the competition is immense. I mean, it used to be, if you were ex-Google, ex-Facebook, Stanford graduate, Harvard graduate, you had a leg up. But technology is really democratizing the playing field. And especially with COVID and all, and everybody not working in the same place, things are really being leveled. So it's going to be harder and harder to know who the winners are. And unfortunately, I think raising capital is going to become one of the main skills, because once you find product market fit, you have to have that capital to really hit the rocket fuel, to make that hockey stick take off like a rocket ship. And if you don't have that ability to raise the capital, it's going to be really, really, really hard. That's another thing I look for in the founders too, almost like a messiah, someone who can paint the narrative, because they need to inspire not only you to invest, but they need to inspire the best employees to come to work for them. They need to inspire the best customers to give them money, and the best VCs to invest, and the best people just to get in their network and help them.
How do you define anti-fragile?
So I think anti-fragile is a couple different things. So on a personal level, the way I look at it is if everything went wrong in the world and all your investments went to zero, even though the probability that's very low, that you would not change your lifestyle and you still be able to do the things that you like to do. And anti-fragile, though, as far as corporations and governments, is a little harder, because I believe the bigger you get, you're only as strong as the weakest link in the chain. And when you're really big, there's always something you don't see coming. So it's really hard for them to be anti-fragile. But as a person, though, I just want it to be that if I made a mistake in an investment or something, I could, still do the things I like to do, maintain my lifestyle. And that's one of the things I learned from reading the books as a child, that, you want to save and invest as much money as possible and have it compound so it works for you. And, spend a lot less than you earn, and never like over leverage or overdo it. I mean, I drive a Prius, and eventually I'll do a Tesla. But the reason I don't do a Tesla is because the places to repair them are about dealerships like 7 hours or so away. And I also want the battery to be better, where you get a longer range. But I really believe in being frugal for the most part, because reading as a child, even though you hear on the news now, like Larry Ellison spends 100 million on this island or whatever, but relative to his net worth, that's nothing. So all the people who are really wealthy relative to their net worth, most of them are very, very frugal.
That's been my experience for sure. What is one thing that you believe in that very few other investors believe?
So yeah, this is kind of interesting, because I believe, and I may have the dates wrong in history, that I think it was like between like 2018, or I mean not 2019, 16, 19, 18, there was a Spanish flu. And this is kind of what like COVID-19 unfortunately is. And then we had the roaring 20s, the greatest bull market of our time back then. And coincidentally now, 2020, the roaring 20s. And I also believe too, that in March, when we had the big sell-off, that was almost like, I believe it was like the 1998 time, long-term capital management had their moment where, the Fed had to step in and have different banks bail them out and things like that. That in biotechnology, there's going to be a big push, since we had the vaccines and all that stuff, that we're going to actually have a NASDAQ bubble within a boom in biotech, that we're really going to see incredible gains in biotech, not just in the technology, but in the price of the stocks and the companies and things like that. And I'm not a registered investment advisor, I'm just saying my point of view. So I'm not telling people to go buy all these things, but I really believe, and people think I'm nuts, like I said about the 10 and $100 trillion companies, in the next, say, 4 years, we could easily see a NASDAQ 45K, like even next year, 15K, and then 2 to 3 years later, 23K, and then year 4, 45K, during Biden's 4 years. And then maybe even after that, as crazy as it sounds, 99K, after 8 years.
Okay, let's get to it. Let's talk about one, and then we'll segue into among the 12 themes that you have a thesis on that you think can do specifically, not just okay, but very, very well over the coming decade. Let's start with the one that you hinted at. I'll define it as biotech, medtech, anti-aging, longevity, that we're on the cusp of breakthroughs that will be incredibly dynamic, valuable around the world. And we'll maybe get to later, as people live maybe much longer, some of the challenges, even for the uber rich, that they may have. But before we get to that, strictly from an investing perspective, why is that part of your thesis? And maybe talk to us some companies, some ideas that you have.
So as far as people living longer, so I believe that, like, if someone, say, for instance, is 60 or 70 now, and they think they might make it to 100, well, in the next 30 years or 40 years, just imagine the strides that are going to be made in technology and biotechnology. Then they're going to live to be 120. If they make another 20 years, 150. So I really think stuff that some people call precision medicine stuff, that goes into gene editing and CAR T cells and natural cancer cells. And then some people call like messenger RNA, the software of life. I'm sure I heard that somewhere or got that from somewhere. Those things are going to be breakthroughs. And I kind of look at some of those things very differently than others. So I almost look at it like it's almost like we're a computer ourselves. So for instance, messenger RNA, it's going to send out different things to the protein. Then there's going to be gene editing and things like that. And they're going to discover things we've never even thought of. Natural killer cells are going to attack certain cells in our body and our immune system that would have killed us before, but it's going to stop them. And it's going to be very personal. So what works for Angelo isn't going to work for James, or is it going to work for one of the audience members? And I'm not a doctor, so I could get some of the terms a little confused, but my overall thesis is that technology is going to aid in these things, with CRISPR, CAR T, messenger RNA, natural killer cells. And I also think mental health is a big thing too. And there's going to be enormous breakthroughs with psychedelics, but, used as pharmaceutical, not like recreational or things like that, under the supervision of a doctor at a clinic, or even like specialized doctors in the field. There's going to be so many breakthroughs. I call it mind medicines. Of course, I stole that from the company Mind Medicine, which trades on the NEO exchange and also now trades over the counter too, which is DCTC cleared. And there's another company called Cybin on the NEO. There's also one on the NASDAQ for people who don't want to experiment with Canada called Compass Pathways. But I believe these companies are going to make incredible breakthroughs in the next decade.
Okay, that's big news. So you're talking about companies that are public companies, effectively easy for people to invest in. You mentioned on the NEO, and you mentioned their focus from kind of mental health. So I know people that have spoken actively about that everyone will know who they are. Peter Thiel, Kevin O'Leary from Shark Tank, that like there's tremendous opportunity. And again, it's nothing to do with recreational. It all is strictly medicinal. And the early returns from people active in that community, I know because I'm a little bit active in it, look great so far. So from an investing perspective, you're saying you don't even necessarily need to be early stage or venture capital or locked up in a fund. There's a way that you could be active in this community. If you do your own thesis, understand the risk that could be in public companies, that could create some wonderful opportunities. I don't know if you want to mention the actual company, but you have, I think, an 8Xer this year, correct?
So were you talking about Mind Medicine? So I had purchased that on the NEO, and it went crazy like in the last 3 or 4 days, but it's pulled back a lot. At one point this year, I think it was like 20x. So now it's probably around 10 to 12x because the price has gotten very volatile. But I know about 3 or 4 days ago, it went nuts, literally like a rocket ship. And what they did was smart because then they'll do like secondaries and raise more money, via institutional players. So of course, people see dilution out in the markets and it sells off a little bit, but then it levels off and it starts its next ride up. But I'm a long-term believer, so I'm not worried about like the volatility or the big dips, because I believe the opportunity, if it truly succeeds, could be 50 billion to 500 billion to even $1 trillion company one day. So it's basically going to from under 100 million on the public markets when I purchased it to about, I think it was around 1.2 or 1.3 billion today Canadian. A couple of days ago, it was over 2 billion Canadian. So you have to do the currency translation if you're in the United States. But still, on paper, that's an incredible return. And remember, if you choose to, you can manage risk. You can sell some of the position if you want to, and you have liquidity. So these are true venture bets, but with liquidity. Same thing in a lot of SPACs, even though a lot of people have negative things to say about SPACs. You just have to do your homework, manage your risk, and think things through. Does this fit my personal thesis?
Yeah, we're going to get to SPACs. That's going to be one of the 12 that we're going to end up talking about. But I think you said some really important things there. So we had on Raul Paul, and you heard him as a member last week, and he was great. And he's incredibly active in an asymmetrical bet, quote unquote, on Bitcoin. And he has a lot of his cash positions in there. But he did state, listen, I have very little debt relative to his pretty significant, by the way, net worth. And I have real assets that I own. And some of them are my businesses, my real estate that produce real income. So to dial back a little bit, yeah, you're swinging for the fences, maybe a barbell approach through asymmetrical bets, but you are an advocate of, have cash, have gold, have real assets that like real estate that may produce income. So have a foundation. And these are things even in like Robert Kiyosaki's books, have your money work for you, have it produce real returns. And then if you follow the barbell, perhaps of 80-20, maybe on the other stuff, you're able to be far, far more aggressive on. So I agree with you. Biotech, longevity, all of that, and psychedelics that play a part of it from, again, the medicinal purposes, especially in the public markets, like you said. There's going to be some amazing companies that are going to be brand names that are going to come from this in the investing and the research that I do as well. Let's talk a little bit. So I had on Mark Faber, the legendary Dr. Doom, yesterday, and he's a big commodity guy. So we spoke, and he was glowing about the opportunity relative to the value in oil. So I know you've been active in energy, from climate change, energy storage, grid technology, but his big tip was, you could even do it like you just said on psychedelics through the public markets, maybe a BP, maybe ExxonMobil. They've actually have gotten pretty aggressive on some of their alternative energy options. Talk a little bit about your perspective. And I know this is being very broad: energy, oil, climate change, energy storage, grid technology. The floor is yours.
Yeah, so I think it's interesting that he likes oil stocks because they're kind of like the value play now. And it's definitely true that maybe someone should take a barbell. So they may have Tesla on one end and QuantumScape at one end of the barbell, and even like the ETF of rare earths, and maybe some uranium, and a company called MP Materials. This is the picks and shovels that uses rare magnets for the EV market on like the really riskier spectrum as far as the high valuation, this, that, and the other, even though I would argue Tesla and them aren't as risky as everyone says. And then on the other end of the barbell, I have started thinking about like the BPs of the world, the Chevrons, the Exxons. And yes, it's contrary to climate change because they're in oil and all that stuff. But the thing is if they survive, they're going to adapt. There's probably going to be consolidation, and they're going to go into some green energy type things, probably develop hydrogen type networks and things like that. So it's definitely a very interesting play. And even a way to play some of that value could even be through options, like deep in the money calls. So if it only goes up 5x and you're halfway in with deep in the money calls, if it doubles, you're getting leverage without using margin. So I'm a big believer in trying to figure out ways to get leverage without actually using margin and exposing yourself to margin calls. And I had learned the idea of that reading about the great Warren Buffett, how he uses the insurance float in the Berkshire Hathaway. And even learning, okay, so there's these things called options. You could even sell puts and then use the cash you get to buy calls on something else, or even buy other stocks or other assets of your choosing. So that's like an embedded leverage. I mean, there's obviously still some risk, but you're not risking a margin call where you're actually borrowing the money, paying an interest rate and things of that nature. So I try to think outside the box that ways that I could create something like that of what they're doing, because obviously I can't have my own insurance company right now the size of a Geico and do, the float that way.
You're on your way.
Thank you.
I know you like to talk, it's a little bit broadly from a thesis perspective, what I would call mind share, the great internet and digital land grab that is happening right now. Talk a little bit about that.
Yeah, I just think we're entering into a world like the 21st century or whatever you want to call it, that back in the year 2000, remember how they used to say, the internet's going to do this, change the world, the new revolution? Well, they were all right. They were just 20 years early. So all the stocks got way, 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 way ahead of themselves. And then finally, 20 years later, it's caught up. And I think we were definitely heading there. I think there's some fund that the guy says directional arrows. I can't think of the name offhand. And he's a really good fund manager. And I call that the arc of the change of history. And that's where we're heading now with a new network revolution. And I actually think COVID-19 helped to accelerate this. Because what happened in, let's say, the last, 5, 6, 7, 8, 9 months, whatever you want to call it, we've had that many years of innovation. Because when something happens, everybody starts to think and puts their mind in one place and focuses on the innovation. Just like with the vaccines. We're having these vaccines quicker than ever in the history of the world. And they're being tested, they're being rolled out. There's several companies doing it. There's collaborations with the government and with public companies and private companies. And the focus is there. So things are happening faster and faster. Because I really believe that people are generally good, regardless of popular belief of the media. And when there's a crisis like COVID-19, enough smart people put their heads together, enough people who have goodwill for the world, and great things can happen. So I really believe that, studying of history and reading about it as a child, you had the printing press. So that was like the beginning of all technology, even though people are like, you're crazy, the printing press isn't technology. Well, back then, that was technology. And then the railroads. I believe the railroads were technology. That the ability to move people, places, and things on the railroads, compress time, that's technology. And then they built off of that. They had the steam engine, make it go a little faster. And then people built the telegraph along those. And then the telecommunications people like Alexander Graham Bell came along and built his thing, and which led to more and more and more things. And then eventually the internet was created. I read it was by DARPA and things like that. I'm not 100% sure what's true and what's not, because you can't really believe everything you read on the internet. But that really led to the internet and the TCP/IP protocol, where you could move information. Then that led to the computer chip getting smaller and smaller and smaller. And it led to social networks. And then we ended up having like the iPhone and the mobile and the app store. And now we're moving into distributed communications, which is blockchain, cryptocurrency, programmable money. And we're moving into centralized finance, tokenization of everything, digitization of everything. So I really believe this is like a new revolution that in the last 50 years, even though we had technology built on top of the internet, we're actually having a whole new revolution in technology.
I mean, just look at the last couple of decades. You have the coming of the internet, like you said, transitioning and growing in social media. And now we're in a completely revolutionary period, which is a little scary. And it does get complicated. We're going to talk a little bit about that upcoming, and something that you know that I've dived very, very deeply into. There will be tremendous winners in this, and not to be active in this aspect of the community for part of your portfolio, I'm pretty confident is going to be very, very foolish when we look back. So we spoke earlier about longevity, about people of wealth, but even not of wealth. What's happening broadly in anti-aging in the next 10 or 20 years or less is going to be so dynamic. So there's been studies that show, and there's dynamics that are in play with inflation, time horizon, et cetera, that when you withdraw, more than 4% of your resources every year, that may have a limited time span relative to a variety of factors. And if you're going to live 20, 30, 50, 70, I won't scare people and say exponentially longer than that, then the dynamic of you, like some super rich that I know, really withdrawing 7, 10, 12% a year, I know this sounds crazy, they may run out of money, even if they're worth hundreds of millions of dollars or more. And I'm not even getting into government confiscation, taxation, some poor decisions along the way, divorce, family issues, squabbles, lawsuits. Here's what I've learned a little bit, and I know I'm big on being conservative in wealth preservation. Generationally over time, wealth preservation is very much tied into growth. You need to grow those assets and resources, and having it all in something where if inflation hits, like government bonds and cash, you will be crushed. You will be crushed. It's important that families dedicate a portion of their portfolio, I think, after a careful diligence, into the things we're talking about. We had some questions come in via text that it goes back to the prior one. Yeah, paraphrasing them. Angelo's had a couple of guests on lately that seem to be glowing about uranium, pardon that pun, and rare earth. Okay, how do I invest? Through an ETF? But is that going to be, am I really getting rare earth exposure? Talk a little bit, because I know you've done some diligence, maybe not as much on uranium, but on rare earth. How could families looking at that as a logical commodity bet or an asymmetrical bet, how could they be more active and know what they're investing in?
Right. It's interesting to start with uranium, because I believe last week or the week before, there was some kind of passage by our government and Senate that they want to have some kind of reserve of uranium. I'm not sure the reasoning for it, but I think that actually caused a boom where the miners took off, on a big upscale run. And there's an ETF in uranium. I think it's some symbol URA, and it supposedly has miners and people exposed to nuclear energy. I don't know a whole lot about that, but I know that exists, and there may be more than one. There's also, I believe, futures for uranium, but obviously, though, people can't just, average guy wouldn't want to buy uranium and store it like you could oil, because there could be immensely bad consequences not only on their person but humanity doing something like that. And as far as the rare earth goes, there is an ETF that gives you exposure to that, and there's individual miner stocks, and then there's that company we mentioned before, MP Materials, that's involved with the magnetics and things like that. But I would definitely say those are ways to get exposure, but it's very hard to get very direct exposure. But for very wealthy individuals and institutions and family offices with very careful diligence, and you probably need a real big expert in that field, geologist or whatever they call it, could invest directly, I guess, in some of the mining projects and things like that might be a way to go. But those are on the extreme risk end. I would say simplest is best. And really, ETFs and things like that, some of the minor stocks, maybe mutual fund if they have it of it, or a closed-end fund or something like that to get exposure is probably the best way. And maybe if they have an RIA or a broker that does managed futures or something, if they choose to go that way. There's just one thing about futures you have to be careful too, because when they roll the futures, that's actually a cost.
Very much so. So let's get a little bit back to where we left off a little bit, but I did want to throw those two questions in. Kind of the internet of everything and what that means to you, and maybe segueing into offline and online transition. And this, again, goes to the revolution that we're going through that kind of started with the internet and now is in everything with the digital innovation and not being left behind. And, again, I'm a little older. I'm in my mid-50s. These were not easy for me to grasp because they're not classically in the wheelhouse that I grew up in. So I have to fight biases I have. And we'll get a little bit more into that in terms of where this is leading to. But why don't I start with getting, again, my audience knows I could be all over the place. You're a little bit like that too. Two of us must be crazy for the people to watch or listen into, but maybe that's a little fun. Talk to me, Internet of Everything.
Yeah, so I believe we're totally moving to a world of dominant digital networks. I mean, truly dominant, almost like monopolizing things. So I remember reading as a child about J.P. Morgan, Andrew Mellon, Andrew Carnegie, John D. Rockefeller, and I would call them like the four titans of industry. And nowadays, we have four titans of industry in the internet age. The Jeff Bezos, the Bill Gates, the Mark Zuckerberg, the Elon Musk. And probably going forward, we'll have four new titans, and I'm hoping and believing that some of them are going to be female, some of them are going to be minorities as far as Asian, African-American, Latino, and they're going to be the next titans. But really, with innovation, the Internet of everything's going to be connected to the internet, including us. Like every business is not only going to have technology in their business, like e-commerce, but they're going to have some level of AI and using data to grow their business, knowing their customers, taking care of their customers. And even us ourselves, believe it or not, will be connected to the internet. We're already started to. The way we rely on our iPhone, we're becoming more connected to the iPhone. We have things like that Whoop thing that you put on your arm that measures your heart rate, or Fitbits. We have things like that. And then we have people like Elon Musk making the Neuralink. Eventually, we're going to have machine-human interfaces. And there's also things now that doctors have, like the Butterfly Network. It was a SPAC that's going to be going public. They merged with the Butterfly Network. I think it was Longview. And they have this thing where you stick this thing in your cell phone, and it literally can do an ultrasound. So imagine how that grows, just scanning like the veins in your neck, your heart. Maybe it doesn't do that now because I know the headline is for ultrasound. But of course, that technology is going to evolve. And if it's not them, somebody's going to develop a full body scan, literally with a smartphone and just plugging something in, and a doctor will be able to do that. And then we're going to have remote monitoring at home. So if somebody's heart is just acting a little funny, it's going to almost like pager style, old school, alert their doctor or someone in the medical community. Oh my God, your heart's acting really weird for your personal pattern. And the more we get to know genomics with AI and things like that, it's truly going to be personalized. Because I really believe the reason a lot of these cancer things don't work on everybody is because everybody is totally different. And we're learning more and more about the genome, DNA, RNA, even their gut biomes. I think all of that comes into play, and there's probably things we don't even know that come into play.
Okay, we're going to get everyone, I would say, grab your coffee, your matcha tea, or like Mark Faber yesterday, your beer and cigarette. Sit back, you're in for a real treat now. We're going to get very deep into it in terms of this digital transformation, programmable money, and just inevitable where things are headed. Without even giving a lot of context to it, you and I will do that in probably private podcast upcoming that will lay a foundation. But just to engage the audience, I want you to talk a little bit about what Facebook called Libra and now their engagement with Diem. And stay with me, audience, how this ties into stable coins, how it ties into a company called Circle, and effectively, inevitably, the US government and investors in Circle, like, by the way, Goldman Sachs. I am going to give this to you to explain what's highly complex and probably try to keep it 3 to 5 minutes. And this is going to tie in, everyone, stay with me, to what we're talking about relative to the digital transformation and what's happening on blockchain and DeFi. James?
Right. So when Facebook first came out with, they called it Libra for the coin or token, and Calibra, the wallet, they have totally changed all of that, because I think the regulators and the Federal Reserves of the world all panicked and said, oh my God, this could truly be a threat to reserve currency status, because Facebook has 2.7 or 3 billion people using it as they grow. They're basically a country. Oh my God, and everybody's commercing in this Libra. We're in trouble. So then they kind of took them to Congress, beat them down a little bit. So then Facebook pivoted and they said, okay, instead of a basket of currencies in this Libra, let's just make like a stable coin USD, and then one for Europe, for the euro, one for Japan, for the yen, and so forth and so on. And they still wouldn't approve them. So now it's come down to just doing one USD coin and calling it Diem. And they even changed the wallet to Novi for some reason.
Okay, James, what does USDC mean?
So there actually is a token called USDC, and you mentioned Circle. So it's kind of, I guess, consortium is a way to say, a partnership between Coinbase, Circle, and this thing called Center, or some people call CenterPay. But what a lot of people don't know, CenterPay has investors like the Goldman Sachses of the world. And there's things that we don't know and other entities, and I'm not even sure who these people are. And I believe we are definitely moving towards, with a stable coin type thing, a central bank digital currency. But because things like USDC have been tested the last couple of years of technology, and since it's money, you don't want it to break, and have everyone go nuts and riots in the street, the government isn't just going to roll it out on their own. They're going to partner with people like the Circle to roll this out. And USD coin kind of sounds like United States dollar coin anyway in our minds. So subconsciously, it's like, hey, this ain't such a stretch. Let's just use this. And it's awful interesting too that people like PayPal and Apple are adding cryptocurrencies to their wallets. Just kind of interesting. I even think that Novi will eventually add Bitcoin and Ethereum, and maybe Ripple and Stellar, or whatever else they want to add. And people are going to truly be using some of these things as payments, not just the stable coins.
This is a very complex subject that we are going to do incredibly deep dives in both white papers and significant, probably private podcasts that we'll distribute to my members only. But we're getting really deep here. So Facebook with Libra, they readapted now this independent organization called Diem. And you keep on mentioning stable coins. I think the vast majority of our audience is not really going to know what that means. What's a definition of a stable coin? And in this example, is it pegged one-to-one to the US dollar?
So in the example of Circle USDC, yes, it's pegged one-to-one to the dollar. But the idea is they wanted to keep a stable price of $1. But it does trade on exchanges. So it could go to $1, $1.02, or it could break the buck, 99 cents, 98 cents, 97 cents, but they try to stabilize it and bring it back to $1. Now, there are other stable coins that are not fully backed, and theoretically you could back them by commodities or anything you want and use algorithms to keep it in line. There are actually some coins that are supposedly pegged to gold.
Yes. So again, staying a little bit on that subject, if I'm quote unquote Facebook and now there's Diem and I have access to whatever 2.6 billion people, and governments are a little concerned how this interplays out, why does the stable coin need to peg in this example, like approximately one-to-one with the US dollar? Why would people buying things through Facebook need to use the stable coin? Is it because the merchants, how does that all interplay without giving us a PhD about it?
Right. So right now, there's merchants on there, and people transact in dollars, obviously. And I know a long time ago, Facebook tried to do some kind of Facebook like points or something like that. And I believe a long, long time ago, Amazon may have attempted this. All this was before its time. That goes back to my thing. All good ideas by smart people eventually happen, but it has to be the right time. So if I'm Facebook, what I want to do is, because for revenue streams, they're a really large company. They got to keep growing their revenue to get that stock price to keep, going higher, get their market cap going to $1 trillion and then 10 trillion and things of that nature. Well, first of all, just having a payment system, you're getting a cut of everything on the platform. But really with the blockchain and things like that, it'll be verifiable transactions. It'll be easy to keep track of things. So that's really why you want to move towards a blockchain. And it's really going into programmable money. Because then let's just say on something like a Facebook, and I'm not saying stuff like this happens necessarily on there, but everywhere in the world, people do illicit things with money, whether it's laundering or stealing money from someone else and then buying something. Well, if you have a cryptocurrency, if you find out that money through chain analysis was stolen, you can freeze that wallet, freeze that address, reverse a transaction. And people say, oh, all the Bitcoin and all that's supposed to be anonymous. Well, it's pseudo-anonymous. But remember, in these stable coins, it can be more and more, even 100% centralized, where they can truly track it back to you. And people say, well, I use VPNs and all this stuff. But yeah, if you go online, they'll get you by the cell towers. So you can hide your IP and that stuff. But if they really want to find you, they can find you. How do people think the people who did Silk Road eventually got caught and they were using Bitcoin? Or how do people think that people who used Bitcoin to pay someone for killing people or terrorist acts, how did they get caught? Because it's pseudo-anonymous. If they really want to know, they can find out. It might take them longer, but they can find out.
Yeah, I mean, the whole argument of it's used for illicit purposes, it's like the worst thing now to use for that. Cash, dollars, real cash, that's what they use. I find that ironic that people still don't get that. Listen, everyone, I know this is highly complex. So let me take a little bit of a break and give a little bit of context to what James and I are doing, at least for my members, that will help. So some of my members or those that are new on this call now know that I am a big believer in this opportunity, from a Bitcoin and crypto to blockchain to decentralized finance, the interest in stable coins, NFTs. And again, I'm not a kid. I immersed myself completely in this community in the last 3 months. I've invested, I've been active in it, and I do not want to hear the excuse, I don't invest in what I don't know. This is so critical that you have to know. So it's on you. You have to do the research. So what I'm doing to help my members is I wrote a foundational paper, and James came on as a co-author because he's wonderful on some of these topics. So him and I have a paper. We don't quite have a title for it yet, but basically it's Bitcoin, Ethereum, and a lot of the issues happening digitally in innovation. It's approximately 40 pages. I thought it was going to be ready by Thursday, Friday, but I've been a little bit finicky about it with my designer. So probably realistically on Monday, and my members will have access to this that will help to streamline the education process that you have to go through. I'll probably record some private podcast for my members that will do a deeper dive. And we might even have something to go a step further, a little bit in hand holding to people, because this does get complicated. It's harder than it needs to be, but it is what it is. And if you don't understand this, if you don't grasp all these changes that are happening, besides impacting your potential investment return, arguably significantly, you are going to be left in the dust, especially if you live a lot longer. We're going to get into now, it's inevitable we're going to have a digital currency. Cities working, it's announced. The CEO of Citi said they're working with governments around the world, creating their digital currencies. It may happen in the US the way that we're describing it now, which would be a little bit of a softer approach. But if you don't understand how to use it and use a wallet, you're not going to be able to buy a loaf of bread. You're going to rely on others, including possibly some charlatans, to take advantage of you. You need to be educated on this. And it doesn't take 100 hours, but it does take some time to be able to do it. Let's talk a little bit about programmable money, central bank digital currency that I thus noted. And Mark Faber, again, who's 77? He was knowledgeable about this and very concerned relative to government seeing everything you do on the blockchain, charging people different interest rates, freezing your account. We don't want to scare people too much, but talk a little bit as we segue from Diem and stable coins and that engagement more broadly to central bank digital currencies.
Right. So I like to always say everything can be a blessing or a curse, and is a blessing and a curse. And technology is neither good nor evil. It's all on how it's used. So everything, I like to give the benefit of the doubt, starts with good intentions, and then things just go off the rails in different directions depending on who is in control. And obviously, the governments want to keep their power, the central banks want to keep their power, and they all probably mean well, but everyone has their own view of the world and how things should play out. And we may not agree individually with that view. But the thing with programmable money is if you have a central bank digital currency, you can literally program that money different for you, different for me, different for one of your viewers. I mean, you could timestamp it. You could say basically at 2:57 p.m. Eastern time, I'm going to send Angelo $25, and it's already programmed in a month ago, and it gets sent at that exact time via the smart contract. You could also say, hey, I don't like something this guy said to that guy on the podcast. I'm going to penalize him. I'm going to freeze his money for 7 hours or something like that, freeze his wallet address, or I'm going to blacklist that address, that when someone gets that cryptocurrency stablecoin, they can't spend it. So it's effectively useless. You could do things like, because a central bank could literally interact with you or I and not have to do it the way they do it today. We have our own central bank wallet, for lack of a better term. And they could say, okay, you have $5 million just sitting in your wallet in basically cash, but digital cash. We don't like that. You're going to pay a negative interest rate of 10%. Well, that's going to inspire you to say, what the And then you're going to say, okay, what do I need to do with it? And they're going to say, you need to buy stocks, real estate, or whatever they want you to buy. And instead of earning negative 10%, you're going to do that. And then there might be somebody else. It's just like the average Joe that makes like $1,200 a month struggling to get by. They don't have to charge them a negative interest rate. But I really feel like the central bank digital currency is the gateway for the central banks and the Federal Reserve to inflict negative interest rates without destroying the banking system. Because it's my opinion, in the current infrastructure, it would destroy the banking system in the United States, which would wreak all kinds of havoc that we do not want. So they have to find a way, or the tools, to at least test out negative interest rates in some type of way. And they could also do something like this too with helicopter money. They could just basically say, okay, citizens, we want you to go to the mall, buy clothes, buy this, buy that, because they're all going down, and having bankruptcies. They can send you money and timestamp. Hey, if you don't spend this money in a week, a month, or whatever, or even in interviews, you have to spend $100 a day, $500 by the end of the week, $1,000 by the end of the month. The money just evaporates. Which in today's technology, I guess they would just have to lock that money and it would just be locked. But eventually they'll be able to evaporate it. I mean, money's going to get smarter and smarter. Via technology, all this stuff is going to get smarter and smarter. I mean, there's a lot of good points to it too, because they can streamline taxation. They could literally go to a flat tax, and the nice people at the IRS don't have to lose their job by eliminating all the things they have to do because they have to manage all this new stuff. So I'm a big believer too that technology actually is going to create new jobs. So all these people that say technology is going to steal all our jobs, this, that, and the other, I don't necessarily agree with that 100%. It's going to create many new jobs. Many people will have to be re-educated. Some people may need some support, and that's fine until they get there. But I really believe that the people are going to revolt before the robots do, is what I like to say. Because I've spoken at some tech conferences and everyone's always scared the AI is going to get set in it. It's going to kill us and take over. And I'm like, no, man, you got to worry about the people revolting before the robots do. Because the people are going to go against the 1% before the robots. Because we're going into super duper haves and have-nots. I mean, it's not just haves and have-nots. It's literally super duper. There's going to be people that are worth $1 trillion, $10 trillion, and then people are standing in food lines.
Yeah, I mean, we mentioned that a little bit with Mark Faber of Boom, Doom, and Gloom yesterday, and he agreed with me, and it sounds like you do too. By far, the biggest black swan, the biggest risk to quote unquote the super rich and family offices, it's not getting 100 basis points less in your investing. It is effectively, one, governments that can do anything to you, including confiscation by a change in political and laws relative to taxation. They could do a hell of a lot worse. Me and Mark briefly brought that up yesterday. Then simply, quote unquote, taking your money as I described it. But civil unrest, bifurcation of the super rich and the not, the fact that they have more votes, more political authority and power. And, look at the book Leveling by Walter, I'm forgetting his name, 2017, uprisings that he called a couple of years ago in COVID-19 and what we saw in the US this year. I mean, are they likely to happen? No. And I hope we're smart enough not to allow them to happen, but there's major, major risk here. I am getting off topic. You and I both do that probably more than anyone else in the world. We're going a little ass backwards on this, but hey, maybe that keeps it lively. Again, I got the white paper and significant resources with James coming out on Bitcoin, Ethereum, and crypto, but I think we do have to cover it. So Raoul Paul, an iconic macro trader, and we all know about the Tudor Joneses and Drunken Millers, and now institutions getting involved. And I forgot to mention Kathy Wood, Bill Miller. It's getting tremendous, tremendous momentum like never before as like the asymmetrical trade of all quote unquote asymmetrical trades. You've been active going back probably 8-9 years ago. You were early in this. Talk to us a little bit about the opportunity in the Bitcoins, the Ethereums, keeping it high level. We'll have much deeper resources coming out shortly.
Right. So the first thing I always say is that every person, no matter their level, should have some level of Bitcoin as like an insurance. So the first thesis is at the very least as an insurance. If we were to have hyperinflation or something of that nature, I'm not exactly sure how we'd have hyperinflation. I have some theories on that we won't get into in this particular segment, but just as insurance. And if there was like ever a civil war or something and you needed to, get out of town or out of Dodge, for lack of a better term, you at least need to have something that's in like a hot wallet or even like on PayPal or on Apple Pay once they start allowing everyone to have some Bitcoin and Ethereum. So I kind of think of it like traveling money. So like, you know how in your wallet back in the day, you might have carried $5 as mugging money in New York, I think is some of the jokes people would make. Where I grew up was, so if someone beat you up, the bully, you would have some money to give them. And it was like more like $1 or 25 cents, but you get the point. So everyone has to start with there. And then from there, they can form a thesis on how much Bitcoin, if any, they really want to have. But I really think just as insurance, you should at least have a very little bit and hope it never, ever pays off. And then a lot of people like to get into, okay, well, what could the price of Bitcoin be? And there's all kinds of people, especially now with it going up. Like yesterday, all these people were texting me when it hit 20K. And they said, what do you think it's going to go to today? And I jokingly said 23K. And they said, where do you get that? How did you come up with that? And I said, in honor of the GOAT, Michael Jordan. And they accepted that. They should have said, you effing asshole. That's no thesis. Just pick a number out of rare air. But instead, some people accept that. Now there are going to be people who were texting me this morning, oh my God, it hit 23K. How did you know? And I told you it was a BS answer. So, but really you have to have a thesis. So I look at it this way. Is it digital gold? And if it is digital gold, what value fractionally should it be of digital gold? So gold itself, I get different answers on the internet, 9 trillion, 10 trillion, 11 trillion, 12 trillion market cap. I don't know. So if it's going to be 1/12 the value of the market cap of gold, what should it be? So I say, well, how many Bitcoins are there today? About 18,570,000, give or take. The reason you got to say give or take, because they're mining some every day, a little bit every 10 minutes. But it's going to take them approximately 100 to 104 years to get to the 21 million cap. Mm-hmm. So that's a long time because they have this thing called the halving every 4 years where the supply is literally cut in half. So it's kind of like managing inflation or managing the money supply, the total opposite of what the Federal Reserve does. And then I say, okay, so if it's 1/12, then what would the price reasonably be? So you have to do the math. And I say, well, approximately 40,411, give or take, is 1/12 of a 9 trillion valuation. If you do a 10 trillion, then it's about 45,000, maybe 44,696. And I'm like, okay, so that makes some sense. Should it be 1/12? But then you get into the thought, well, could it be bigger? And also people are going to say, if it's 1/12, well, why couldn't it be 2/12 of gold? 3/12 of gold, 4/12. But without even going there, my bigger thesis is the technology. I think a lot of people truly underestimate Bitcoin being a dominant digital network, the network of money over IP. And in that case, let's just use the example of, like, say, Microsoft, Facebook, even though Facebook isn't a trillion yet, it probably will be. $1 trillion market cap, what price is that for Bitcoin? So that's just over 100,000. And then what happens if it gets to 10 trillion? That's 10 times that. Be $1 million, and we're going to have multiple expansions. So the thing is, if these tech companies keep expanding to larger and larger and higher valuations, then the Bitcoin market cap should get larger and larger. So, 1 trillion market cap, if you want to make it equal to approximately, say, Microsoft, or I guess Alphabet is sometimes $1 trillion, sometimes a little bit higher, a little lower. Maybe that gets you in the 53, 54,000 range. 2 trillion gets you to 107, 108,000. The 10 trillion gets you to 500,000 to the million range. And really 20 trillion is what actually gets you to 1,078,000 by my math. But this could keep going larger and larger. And what if Bitcoin as an asset class with all these institutions coming in is more like the Dow? Because remember, back in the day, the Dows had to start somewhere. It was in the hundreds, and it was 1,000, and now it's 30,000. Well, why couldn't Bitcoin just be an asset class where people just keep piling in? And it has its ups and downs. It's much more volatile than most asset classes, but it's only 11 years old, so it's like a child. But eventually it evolves, and it's 30,000, it levels off and never breaks that at one point. Then it's 50,000, never breaks that at one point. Because I actually believe someday, if we all live long enough, we're going to see Dow 1 million. So why couldn't you see Bitcoin 1 million, even if my thesis is wrong?
Yeah, I mean, just going back a little bit to something you said right prior to this, and again, a highly complex subject, but central bank digital currencies, inevitable. The governments could still make more. It's not limited, and it's a centralized network. They see and control everything on that blockchain. Bitcoin is decentralized. It's completely different. And we don't have the time in today's setting, but in my white paper and in some podcasting that James and I are going to do, absolutely there's some concerns to have. the nationalization of Chinese and Russian miners, possibly quantum computing, government intervention. That cat is pretty much already out of the bag. And they're actually involved in it now. And there's too many institutions. They can maybe tax it more. And those would all be things that are negative in risk that the community is addressing. And they have very, very small chances. But nonetheless, it's an asymmetrical bet if you're looking at it as an asset class for a small, very small percentage of your portfolio. Much more to come up on that. That's going to be much deeper to come. What inning are we in? Since you like baseball, what inning are we in as far as institutional level adoption into cryptocurrencies like Bitcoin and Ether?
Yeah, I was going to say one quick thing too about the central bank digital currencies real quick. Now that I thought of it, and I talk about this sometimes, is a lot of people think, okay, so once the central bank is printing the digital currencies, we'll be able to see how much they're printing. I actually think they're going to trick us, that they're going to have banks do tokenized banknotes. Back the way in the day, they used to have banknotes, and the banks will issue their own tokenized banknotes, but it doesn't actually count as the Federal Reserve printing the money. So it'll be banks literally printing the money, and it'll be like on their balance sheet in some way. And then to go into your question, so that answer changes like every day now because something else keeps happening. So I would say in Bitcoin, we're in the stadium, everybody's happy. We've had the national anthem. Someone just threw out the first pitch and the ump's getting ready to say, play ball, and someone's in the batter's box. And that's where we stand in Bitcoin. And in Ether, where we're at now is everyone's entered the stadium and they're getting ready to sit down. Because now the CME is going to have a futures contract supposedly launched in February. And I think there's more and more adoption of both Ether and Bitcoin. Because I was reading the other day, some billionaire guy, I think his name is Alan Howard, is investing in some hedge fund that's already bought like 600 million of Bitcoin and Ethereum. And they plan to buy another, say, 400 million. Who knows if they actually end up buying it, but that's the plan. So, obviously more and more institutional players and well-known investors and people of notable names in finance are going into Bitcoin and Ether. So I definitely think we're definitely getting there. Now, as far as stuff like the money Legos and DeFi go, there's literally no adoption, but I did have a question for you if you didn't mind me asking.
Go for it.
So, Angelo, how are you seeing, the education and the participation among the world's wealthiest families in digital innovation?
Mostly abysmal. Normally, family offices are ahead of the curve on institutional investors. We had on Dr. Ashby Monk at Stanford a couple of days ago that going back to the 50s in hedge funds. This is difficult with cryptocurrencies. It's just different and it is an age thing to a degree. I've interviewed a Forbes 400 billionaire in New York in 2017. I asked him about it, completely dismissed it. I didn't have the guts to follow up. Now I'm more confident, and I would, in terms of, okay, you're dismissing it. I understand. How much research did you do and what's your thesis? And I know the answer. It's zero. He did none. It's just, this is technical. I don't quite get it. It's mumbo jumbo. I don't even want to learn about it. It's just going to disappear. Let me stick to what I know. That's a real big mistake. According to Plan B, go on Twitter, you'll know who that is, or know what he does in his charting, which is amazing as a classic macro guy. 10 years ago, admittingly 10 years ago when it was very, very low, you put 1% in Bitcoin and 99% in cash, you would have outperformed the S&P 500, which had a pretty darn good run over the last 10 years. So this is one of the reasons why I immerse myself in it, why I'm talking about it, why I'm writing about it, why I'm interviewing and knowing the top thought leaders around the world, including the people that likely may be the biggest personal owners of Bitcoin, the Tim Drapers, the Barry Silberts, and many others, Dan Moorhead at Pantera, et cetera. And again, there's definitely risk. There's concerns that I have, but I've been a little disappointed. And I think some of it comes down to age issues, older CIOs not wanting to get out of the comfort zone. And I look at institutions like Mass Mutual putting in 100 million, admittingly a tiny fraction of their portfolio. Michael Saylor at MicroStrategy, a public company, what Jack Dorsey's doing at Square. I could go on and on. Investors like Cathie Wood, Druckenmiller, Tudor Jones, not young bucks or spring chickens, by the way, but macro traders that get their emotions out of the way and just simply make logical decisions. To me, it's been money. It's been an asset class. It's been from an intellectual technology kind of IP perspective and a store of value. If you just do the research, and again, concerns I have as well, which is why I limit exposure. But their families have been behind the times on this, and maybe I could have a bit of an impact. If nothing else, I want them to do the research, form a thesis, and then say no. And I'm cool with that. They might even be right, who knows? But don't just randomly say no, because your assumptions about all of this or much of this are shockingly wrong. Don't be biased. Don't fall into not having a beginner's mindset. It's tough. I know. I'm not a young guy either, and I'm not always comfortable with technology. But enough about me with that. So, and where it also gets complicated, and my white paper talks through this, is it's not easy for people. And you're going to know this better than me. So I go on my phone to like a Coinbase, which just announced, by the way, filing for the S1 today as we're doing this. I download the app. I got to set up a password. I need to be approved with Know Your Customer. So I got to send them my driver's license. I got to do this. I got to do that. And then do I own it in Coinbase? And is it like a street name stock where I don't really own the Bitcoin? It's ledgered to me. How do I transfer it to a wallet? What is a wallet? Do I have a risk in that? Could my SIM in my phone be hacked? If you're going to be, and I think you're going to completely agree, I wouldn't know how to do all of that and go through that process. And I talk about that in the paper. But if you're going to be more significant in this space, I don't know, I'll make it up, 100,000 or more, then, come on, you're kidding me. You need to go through over the counter. And again, all this is discussed in our paper. And you need to use a professional, institutional level custodian. But you have to understand what that means, what diligence you're doing, what insurance they have. And by the way, it's going to be shockingly little, and what is deep cold storage? Oh, and by the way, just because you tell me you use deep cold storage, really? I know one company that's amazing in terms of their custody. And even then, you got to do your own diligence on it. Let's save the discussion about what is truly deep cold storage and the safety measures for, I would say, the paper and the podcast that's upcoming in a couple of days that my members will get sometime into next week. Because again, that's going to be a 2-hour plus discussion. It's a very, very deep dialogue. Wow. Well, we covered a lot on this, more than I probably wanted to, because I do want to keep it moving because there's so much that we're talking about. You mentioned it before. It's been really hot with family offices lately. Let's talk a little bit about SPACs.
Great. I was just going to say one last statement on all this stuff about people not being involved or getting in. I think it's because there's a lot of FUD out there on the internet, fear, uncertainty, and doubt that people spread. And not only that, when you look up something on the internet, even about Bitcoin, you'll get different answers. And it's not because someone's trying to deceive you. It's because things move so fast in this space. Something's written and it's on the internet that's out of date. And nowadays, when you get to Ethereum and decentralized finance, it moves even faster. One day can literally be a year, and it's moving faster and faster with Bitcoin. So a lot of it is that too. It's really, you got to keep learning and keep following it. It's like a full-time job. So yeah, I really like the SPAC vehicle. It's kind of controversial because some people don't like it, but I look at it in two ways. One, with 0% interest rates, I'm always going back to that. It's a bond proxy. So if you can get these things at $10 or even below $10 after they start trading, you have the ability to redeem when you find out, when they take the vote, who the merger is with. And then you're always getting to $10 back if you redeem. And usually there's a small amount of interest in the trust. So it might be $10.12 might be the redemption, or even $10.70 in a really large SPAC. So that right there is a return on your money and interest rate instead of zero or negative. And not only that, you can separate, if you get it for $10 when it first comes out, the warrants from the actual unit trust, because technically SPAC is a unit trust. So you could redeem or just sell in the open market and then hold your warrants as an upside, a longer term option, and sell that. So now you're even increasing your return even more. And then if you really get lucky, some of these SPACs will merge with an EV company or something. It'll go nuts. It'll start mooning and it'll be up 40 or 50%. And then you can say, hey, I want to hold on to this, or I don't. Make your own decision, do your own research on the company that they're merging with. So that's a great vehicle. But what I really like about it too is it's given a lot of these companies the opportunity to go public earlier, because I really believe that companies like Uber and all waited way too long. And there's other companies that waited even longer. I think it's a lot better if they tap the capital markets, after 5 to 7 years, not after 10 to 12 to 15 years, that they come in earlier, because it gives everybody a chance. Because even if you're a wealthy family or institution, there's only so much money that an Uber or someone can take at each stage. So even if you wanted to get in, there's other investors that are also competing to get into that deal. But if they're publicly traded, then everyone has a fair access to get in.
Yeah, I mean, obviously it's been really super hot, and you covered it well in terms of SPACs and the interest in families. What is your take, a little bit out of left field, what is your take on the creator economy?
Right. So it's interesting you asked that, because I actually have the feeling, and I think someone even kind of hinted at this on a television show I saw, that someone's going to try to SPAC an influencer. Now, I think they were using the example of Kim Kardashian, but no, I take it a step further. No, they're going to take like a TikTok star and they're going to SPAC them because they have a future cash flow. And a lot of these TikTok stars and influencers are now becoming, literally venture capitalists, joining a firm or starting their own fund, or being an advisor for a company and getting advisory shares, or helping startups. And they'll probably start consulting even families and institutions at some point. So I'm saying, influencers are eating the world. I kind of stole that from Mark Andreessen's software is eating the world. I'm saying influencers are eating the world, because they're going to take more and more relevance in the world as we go, whether we like it or not. And it can be a good thing, because there's many great people that are influencers. And of course, there's going to be some bad apples out there. So it's going to be good and bad, blessing and a curse. But I really think there's going to be an infrastructure out there eventually one day, where there are going to be, maybe it's tokenized, where you have a rev share where you can earn a certain amount of an influencer's revenue. Now, today, it's kind of being experimented in this thing called NFTs, or non-fungible tokens, or actually redemption tokens, where an athlete or someone, you can redeem it to meet them or do things like this. And there's been various levels of people trying these. And a lot of people don't really understand the NFT space. So non-fungible token just means it's one of a kind. You can't divide it into 100 or a million or whatever you want it to, that it's just one of a kind. And I really think this is going to play out well in things like art. And people are even doing music on the blockchain as NFTs. And there's this thing called .ens, which is a blockchain domain that's considered a non-fungible token. And even tickets, one-of-a-kind ticket, which almost goes into the redemption type thing. But I actually think there's an enormous asymmetric opportunity for family offices who are well-versed in things like art. Because I have heard and read that some of them will take a real liking to a young artist, and they'll really invest in that person's career and help them grow and get their notoriety and their fame in that world, in hopes that they might buy a painting for $500 or $50. It becomes worth 5 million or 50 million, or the Holy Grail, 100 million. I think in digital art this is going to happen, and I would actually think it would be really cool to have someone they already work with, have them do a one-of-a-kind digital art. And since they don't normally do digital art, that very first one is going to be the rarest of the rares. It's like getting the rookie card of Wayne Gretzky or Michael Jordan or something like that. And we're moving towards smart NFTs. So I don't think the technology does this today, but eventually you'll be able to have the signature in there of that artist where it flashes. So it's going to be really hard to counterfeit that. Now, obviously, in enough time with technology, someone will probably figure out a way, but that's going to be much harder to counterfeit a digital collectible that's on the blockchain of an artist than actually counterfeiting the actual painting. Because I'm sure there's a lot of experts that had hundreds, if not thousands of years to counterfeit paintings. It's going to be really, really difficult to do this on the blockchain. Not impossible, because I always say nothing's impossible given enough time, enough money, enough technology, enough reason. But it would be very, very, very difficult. And I think this also leads into, and some people are trying this, the tokenization of things like real estate, and even just art not being NFT. So if someone has a painting and they want to get a little bit of liquidity, they could tokenize 20% of the painting or 20% of a piece of real estate, and they could get some liquidity. And eventually, we don't have it today, but there's going to be some kind of alternative trading system that's liquid. There are alternative trading systems that do trade these security tokens, but they're not very popular or liquid, that they're going to be liquid enough, and there's going to be market makers and things like that. And with 0% interest rates, there'll even be kind of a borrowing market where people can lend out their tokens. So let's say you sell 20% of your building, so you're getting some liquidity there, but the other 80%, you're still holding tokens. But some of the market makers want to hedge risk and stuff. They might want to borrow those tokens, and you can earn an interest rate. So, I mean, this tokenization world is going to turn into things people never thought. I'm sure things I've never thought of, because there's so much creativity in this.
I'm trying to be diverse, James, in terms of I'm sorry, everyone. A lot of this, like what we just discussed on non-fungible tokens and tokenization, which I do give some love to in that white paper, which again is way more than just Bitcoin and Ethereum, although we go over it lightly, admittingly, it does circle back to this. What's happening now is digital innovation, which from Bitcoin to the blockchain to tokenization to NFTs, broadly decentralized finance. And this is all like what in the last 12 years, and really a lot of it the last 4 or 5 years. Imagine what the next 1 year, let alone 5 or 10 years is going to look like. And now I go back to, I keep on saying, do you kind of understand why I don't invest in what I don't know? Then start to know. Start to work with the right resources and the right people to help educate yourself, to hold your family office to a standard of having your people understand this. And when they say no, demand what have you put into it, what's your thesis as to know. And you might be right, but I want to see it. Just the fact that, no, I don't understand it, it's bad. It's bullshit, and it's completely unacceptable. We are going to see the rise, probably in larger family offices, of CIOs and families maybe demanding it, of hiring people to specialize in this as an asset class that understand it, because there's going to be tremendous asymmetrical opportunities, I believe, and absolutely risk that need to be mitigated and managed. So I see some questions, at least via my text, coming in. And by the way, our live audience today, bring it on. Ask your questions. I know these could be complex and unique subjects, and some of it, probably the vast majority of you, never heard about non-fungible tokens. And again, we gave you like a 1-minute definition, but it's changing so much. Everything that we know of finance, and some of the trusted companies that we know, Goldman, JP Morgan, they're involved. They're a little bit discreetly behind the scenes. They have incredibly smart people that are helping to build this and be active in it. There'll be winners and there'll be losers. And again, from my side, and I know I sound passionate about it, you have to put in the effort. And then again, if you say no, you say no, but do what James does. Be open-minded, form a thesis, really dive into it. You could. I did a fair amount of this, admittingly a little more in the last 30 days than 3 months ago, but I immersed myself. I put money into it. I understand the mechanics of what's going on because I have a stake in it. I could go on, but if you're looking for something that is going to give you that asymmetrical opportunity, it's going to happen earlier stages in something like what we're talking about now. It's just a little scary. You have to educate yourself about it, and very, very carefully. Again, I will repeat, this is for education at this moment in time, mid-December 2020, and entertaining purposes. Much of this, you could lose everything that you put into it, which is why you need to understand that you're a single family office level investor. Understand your risk tolerances. And like I mentioned with Raul Paul, who was on last week, he has lots of money in successful businesses that produce income in real estate and other real assets in diversity, which is really, really important. And even Mark Faber spoke about that yesterday, maybe not as much as we could have went into, but relative to diversity in terms of holdings. James, we're probably, unless we get questions from the audience, and again, I encourage you to bring on those questions. In the meantime, if you could maybe put a little bit of a close to what I call the 12 themes that you believe in investing. And I know we lost a couple of people on the line, if I could call it the line, even prior to the top of the hour. And I think that was because, again, they had a bias coming in, some of them, relative to, I invest in stocks, bonds, and real estate, and that's what it is, and all this stuff. Again, they're not doing the research. I hate to keep on pressing them a little bit like that, but I feel it's my job. I feel I have to. And by the way, neither you or I are what I would call Bitcoin maximalist. There's absolutely concerns that I have, and that you and I have. But to just be ignorant is just completely unacceptable to me.
Right. So I believe in harnessing the power of innovation, of smart people, and investing in tailwinds. So to me, I know we said 12 themes, but inside those 12 themes, there's really just 5 things where I really see the big tailwinds. And that's decentralized finance, which obviously includes, the Bitcoin, the Ether, and the cryptocurrencies of DeFi, and the tokenization, NFTs, things like that. The creator economy that we touched on a little bit. And then, mind medicines, which are like psychedelics and things of that nature, but done with an FDA approved way, not recreational. Climate change, And my really big one is all ties into the intersection of humans and technology. We're really moving into being symbiotic with the computer. It all kind of ties into my thesis.
Yeah, I mean, it sure does. And you put the time and effort into this. You came from nothing. You took risk, you built wealth, and you're still kind of in a growth phase in terms of what you're doing. And like any person who's a good trader, you know when to take some chips off the table, even if it means you're likely giving up some upside. And you've done that before in Bitcoin and crypto. And looking back now, you're probably like, damn, I should have stayed with it. But at that point, relative to your risk tolerances and the fact that you had a profit, that was likely the right thing to do. And that's what quote unquote smart investors and smart traders do. They take asymmetrical bets by understanding what's my limit on my downside, maybe all I put in, but my upside. And then once things start to go up, knowing when to take some chips off the table, even if it means you're likely going to give up on some gains. There is something to be said to, living to fight another day and being, careful. I completely understand it. Again, I'm going to give maybe a final chance for our live participants. And I know some of you prefer to text me relative to questions that you may have. And maybe while that is brewing a little bit, and I'll keep an eye on the chat feature, I'll also mention that, again, James is a member of the Family Office Association. For my members, I think one of the biggest value is simply like, wow, he was great. Could you connect me to him as either family to family or whatever, CIO to a family? I'd love to maybe get his ideas on certain things, share some things we're doing. That's the probably the anchor value in terms of being a member in an organization like the Family Office Association. And again, we're working on that white paper. It's basically done. Just we're going through some reiterations relative to design and formatting that we need just a couple of more days. And we have much, much more coming out, including a little bit of some surprise news, good surprise relative to how we could be of greater value to the community, going from 0 to 100 on these kind of complex subjects. I do understand. I think one question might have come in. Let's see. Actually, a couple more. Let me take a look at it first. It's I don't know if it's a clear question. Celsius, BlockFi banking and interest rates, question mark, borrowing. What could you decipher from that, James, and any comments?
Yeah, so it looks like the question is that they want to, they have Bitcoin and they either want to lend it out or they want to borrow Bitcoin from one of those two parties. There's a lot of parties that do it, but BlockFi and Celsius are two of the well-known ones.
Sure.
And what I would say to that is, if somebody's been a long-term holder and, has a significant amount of money in Bitcoin, but really doesn't want to sell any, then there's nothing wrong with, taking out a loan against it as long as you understand the risk. Because obviously if there's some kind of flash crash or something, these things will liquidate you, to manage their risk. And then you may have a reason as an individual, institution, or whatever, to actually borrow Bitcoin, and you pay an interest rate. So I don't know what their current interest rates are. You have to look on their websites. And then there's different things in DeFi where you can get involved in different liquidity mining and stuff. There's different types of interest rates, but that goes into a lot more steps. The easiest way probably if someone's trying to either lend or borrow is to use a BlockFi or Celsius. So without being very direct in his question, knowing all the details, I'm just giving like a basic information.
Yeah, and that probably is the easiest.
That's what he's asking.
Another question came in when central bank digital currencies come to the market, and yes, it's inevitable. What do you think the cryptos other than Ether and Bitcoin, how will they react?
Yeah, I think that's really hard to know because I always say everybody who's like, even when they just talk about Bitcoin or Ether and they say, oh, I'm 100% right, I'm so sure. They're either deluding themselves, they're crazy, or they're lying for some reason. And a lot of times I think it's a confirmation bias when people go too crazy on that stuff. They're not trying to deceive anyone. It's just that they have a holding in it and, they're praying, oh, please, it's got to be right. So everything they say leans back towards it. I try to keep an open mind. It's really hard to know. So I would think whatever's an infrastructure play, and it may not even be like a protocol that you buy, but as a family office, if you invest in the picks and shovel, either via private investments directly or funds who invest in those companies, that's one way to go, a picks and shovels play. because it's really going to be hard to know over a 5-10 year period who the winners are going to be. I mean, even some of the top 10 market cap cryptos today may not be in the top 10 even in 5 years from now. Now, I'm pretty much a believer that the probability is Bitcoin, Ethereum will obviously be the top 2 blockchains for a long time until they're otherwise disrupted, and maybe they don't get disrupted for a number of years. But it's really hard to say the effect on the tokens and what level of tokens. Some of them, it might help a lot and they'll rise as a protocol, but I'm a really big believer. And also there's a difference between the protocol, the company, and the actual protocol, because what is the protocol claim on? Just the right to that technology. And a lot of these companies have digital autonomous organizations. And then they have a parent company that has contracts with like the Johnson & Johnsons of the world, big corporations, Volvo. And then they say, on their website about the DAO, we have contract with these people. Well, I'd be willing to bet a lot of money they can contract with a digital autonomous organization as Johnson & Johnson. And the question is, does the value accrue to the token too when the value accrues to the parent company? Maybe it does. And maybe they both happens equally, but maybe one of them goes to the moon and the other doesn't. So I always think of a diversified approach too, have some investment in the private companies and public companies that support the infrastructure. And there's not that many public companies that support the infrastructure as of today. There's a lot of private companies, obviously, and then have some exposure to some of the riskier, lower market cap protocols. And some of them, their market cap isn't even that low anymore. Some of them, it's $1 billion, $2 billion. So really have exposure to all of that. But it's really going to come down to, I think, with the central bank digital currencies, the central banks are going to want to partner with the infrastructure that they know works and not build it themselves, at least originally. And then the things that they feel compete with them are the ones they're going to try to eliminate or kill.
Yeah, that pretty much gets to it. And we hinted at that relative to what's going on with the USDC and Circle and what's behind it and all that. So it'll be, again, we don't know how this is going to play out. And yeah, if you're investing in some of these perspectives, like I said, limit your exposure. Right now, I'm saying, depending on your net worth and factors, probably 1% to 3%. For some, maybe super, super, super rich, beginning less than 1%. And for others, maybe more, if you're willing to do the research and form a thesis. And again, whatever works for you from your risk mitigation, et cetera, perspectives. Some other comments came in. Someone stated without clarity, Northern Trust moving in. I'm assuming maybe you meant on a Bitcoin or crypto perspective. Again, with the news of Mass Mutual. And I spoke to a company in the know and they said, oh, that's not the only one. They may be the most prominent. There's other prominent institutions putting in, 50 to 100 million, some more. And, we know that eventually we think there's going to be an ETF. And then imagine, not only could you short it, that could be a major issue. We'll get to that in the future. But how the masses can now buy it and easily, because part of the problem is the complexities of especially smaller amounts of Bitcoin. Now, again, I think the argument could be if you're a gold person, that's the same thing as the gold ETF versus actually literally physically owning it. So by no means will that get rid of it. Might even among the hardcore, might even increase the people interested in literally directly owning Bitcoin. But from strictly a pure investment play, it'll probably help. If I had to take a guess, it'll probably be a BlackRock or someone like that. Again, all these things are happening behind the scenes, and maybe they don't work out. I have no idea. No guarantee an ETF is going to be approved, but there's lots happening. Maybe one or two other questions came in. I knew this one was going to happen. We'll probably be a little careful in terms of how it's answered, but it is beyond Bitcoin and Ether. Are there other, I'm assuming, cryptos that you would suggest warrant owning?
So I would say we're not registered investment advisors, but you can go to CoinMarketCap and you can see like the top market cap companies. So I would say, look at the top 20 or whatever, learn about them, read about them, go to their websites, look at the thesis, look at things like how many coins are in circulation now, how many can be in circulation, read up on the technology. Does the technology make any sense? Things of that nature, but really things like that. And then from there, you can just expand your list down the list, from 20 on to whatever number you feel comfortable with, just even for the learning experience, and then make your own kind of critical thinking to say, hey, okay, this really resonates with me. Maybe I take a stake in this particular token or coin, etc.
Excellent. So I am going to go into a close. It'll take about 2 minutes. While I'm doing that, if a live question comes in, because James is so great with his time, I promise I will ask it. So kind of final call for questions from the live audience. I'm not really going to recap my opinions. You heard them throughout here. That would just be repetitive. It's been great having James JJ Sowers on. I hope you enjoyed it as much as I do. He is a mile a minute. If that's not your thing, then this wasn't your thing. It's how he thinks, it's how he works, and I find it invigorating. Again, this was educational at this given time, per our opinion, which could be wrong. It was meant to be somewhat engaging and entertaining. And we're talking about things, a lot of them are high flying. And again, you could lose everything. You need to do your own level of diligence based on your own situation. It's been a blast. Again, many of you can reach out to me relative to the white paper, especially beginning on Monday. If you're watching this in a video or podcast, that should be already quote unquote done. We will be, for our members, and maybe some of it will be expanded a little bit, doing very deep dives with me, James, and others into this community, which again, can't even in 45 minutes to an hour properly be covered. There are complexities that I've gained tremendous experiences with, and someone like James is amazing as well. And another way that we could engage with members that will help them more deeply understand, really hands-on. And again, more to come on that as we begin to wrap up the year. I'm taking a look at the board. Very kind. It seems like people really enjoyed it. James, I think you broke my record, which was either me and Adam Robinson, or maybe from earlier this week, me and Lynn Alden on time. So that was like an hour and 33 minutes. So you are the current record holder, I might add, until I do another one of my solos where I could probably go on for 2 hours. But this has been great. And again, strictly educational, entertainment. You could lose everything. Do your own diligence. My members, if you would like to connect with a fellow member like James, let me know. And he's happy for that as it comes through me. And again, everyone, I'm Angelo Robles. I'm the host of the Angelo Robles Podcast. I'm the founder and CEO at Family Office Association. We're a global membership organization dedicated to the interest of prominent, successful families and their family offices. We do significant original proprietary research and content for our members. We do host global programming. It's a little more complex now during COVID, but 2 weeks ago, I did a small workshop in Miami. So theoretically, we're still being active where we could discreetly on quote unquote smaller workshops, but really hundreds of these digital programs for my members. Sometimes they make it up into our more public platforms, but actually less and less. I also consult and work with families in a variety of perspectives, becoming more global, creating family offices and adapting to the times. And that's been a blast. I really, really enjoy the work that I do with that. Go and subscribe to our YouTube channel. I probably put too much up on there, but it simply is Family Office, maybe one word. It's our Family Office channel. My website is familyofficeassociation.com, and my direct email is angelo@familyofficeassociation.com. Thank you all, everyone. Happy holiday season. James, great to have you on. Look forward to the next time. Everyone have a great day. Thank you.
Thanks for having me.